Let's look for a POI and explain. You don't just take your entry of POI. Trust me, you will get wounded a lot of times. This is another block here, very sweet other block. All of us can see it. What makes an order block valid? Imbalance. That reminds me. I will teach you guys using the levels and higher time frames as confluences. And I'll teach you guys order blocks. Important too. I'll just scratch the surface. Look at this order block, very valid. For those of you that know what makes an order block valid, you can see that it's a very valid order block. Very, very valid. Liquidity. Very nice one. You just go, you can go and place your entry. You will say, that's a valid order block. And then you want to sell from there. You are not wrong. But obviously, you see that the market does not send you. Now, if you had had a little patience, what how the market wanted to react to that block, you would have saved yourself all that stress and all that wasting of money. Right? Because as price gets into this, we want to go and see that price we have there. You realize that there is no entry for you on this trade. Whereas price broke this area, broke that area, flipped that zone, came back into the other block here now, and moved. As soon as it flipped this zone, it made this other block valid because this other block was strong enough to break this one. This was strong enough to break this one. It flipped it. A worthy trial, worthy one. As you tapped into it, you might not want to take your trade directly from here. You might not want to take your trade from here, but you go down to your smaller time frame now. Let's go down to our smaller time frame there and see. Let's go 3 minutes. Let's see what happened there. Am I sure I got the right place? Oh, let me go to finish that. I want to ensure that I'm saying the correct thing. Oh my God, I'm so tired, guys. So tired. Okay, I want to ensure that I'm saying the right thing. Okay, this is an order block right here. And we see how price came into that order block here, right? On the 15 minutes time frame. On the 15 minutes time frame, personally, I don't want to take my trade there. So let us see whether the small time frame give us entry. Let's take the 5 minutes time frame. First things first, 5 minutes time frame. It bounced off. As soon as it bounced off, it created higher highs, higher lows, moved off, created liquidity as usual. It has bounced here already, right? On the 15 minutes time frame, and has rejected. It came back to tap into it and has rejected. So in our mind now, we don't know what price is trying to, right? Let us assume we don't know what price is trying to do. And it came back and tapped into this place. It's going. That's not giving us any sweet thing that we like. Let's go 3 minutes time frame. You'll be shocked. I'm already seeing the entry already. I'm already seeing the entry. Trust me, I'm already seeing the entry. This was the 15 minutes tap. This week here was 15 minutes tap. Watch me very closely. And then it pulled back. And then it came back and tapped here. And then it has created highs here. This is high low. Don't underestimate internal highs. This is one high here. Look at that high. And this high here, I'll mark it because of the way it took out this high. Impulsively. I'll mark this area. I'll mark that area. My first trial will be here. Risking my normal risk. And my stop loss will be below this point here. Risking my normal risk. My first take profit will be this highs. Why? Liquidity. This high, liquidity. Price might just shoot the liquidity and go down. So that will be my first take profit. Yeah, then 7 pips to 7 pips, 3.7 ratio. With one lot size, I'm risking only about $70 and $3 to make $270. And look at how it happened very fast. Based off of the fact that I was patient, I used a breaker block entry here. Because this block cleared these lows here, cleared these lows, and then still went back to clear the highs back. This block cleared these lows and impulsively cleared this went to move up and clear its high like created. So as it was coming back with a worthy trial, boom, enter 3 minutes time frame, you are in that trade. Okay. On our live session on Thursday, we will likely catch a trade like this. In the morning, most mornings that I have time to sit down on my chart, I used to catch trade like this. Play. I'll just catch this type of zone to zone. I always call it zone to zone trades because you are not looking for too much. Zone to zone. This is a zone, breaker block zone, bam, tap to the next high. Bam, you are done. You're out of the trade. You are done. You're out of the trade. Zone to zone trading. That's what I call it. Zone to zone. Very, very sweet type of trading technique. Zone to zone. All right. So look at that entry right there. Patience, because look at it. Look, this is the tap. But look at where your entry was. This is the tap. But look at your entry. You still caught a very good trade. What if you entered here and the price went against you? You would have been very unhappy. But if the price should go against me here now, I will still be very happy. You know why? I was patient. I followed my rules. I followed my trading plan, and I caught the trade. Do you see? I've answered that person's question, I believe. I've answered that question already. Okay? So let's talk more about liquidity. We are still looking for more liquidity zones in the on the chart, especially how the markets reacted to other blocks and swept them as liquidity zones, swept it away as liquidity. Let's go back in time. Let's go back in time for a minute. I just pray tomorrow is not a day where we are. Tomorrow is May 4. Tomorrow there is no US dollar. At least there's no major news till like 1 o'clock. All these news are not news that will hold market down. Because it's very annoying. May 5, USD. I'm not trading on Friday. The market, what the market did today, even you sell formation, I'm buying. And then for those that understand their own pattern chart, it gave a lot of buying, but it gave me my sell formation and it just me out. You know. Yes, there is liquidity in every time zone. Every time zone, there is liquidity to be swept. Always there is liquidity to be swept. I'm coming. If these 3 tops should touch like this, that is serious liquidity here. See these 3 tops, liquidity. It must be cleared. It must be cleared to touch this top here. It must be cleared. Let us see whether it cleared it. You see it? You see it? Cleared it to touch this top. Cleared it nicely to touch that top there. Cleared it nicely. There is liquidity on every. How do we know liquidity that will pull price? Me too, I don't know. When you cite liquidity, you watch what price is. Let me tell you, let me answer that question very well. When you cite liquidity like this, and price is still somewhere around here, you don't just expect price to just start flying up like that. Because even in your own eye, there's liquidity here. Look at that pre-touch there. Look at it. There's liquidity here. So price has a choice. Go and clear this one to clear this one. What did price do? Price first cleared this one, right? And then finally came to clear this one, this bigger one here. Okay. Look at what price did there. What you should be looking out for once you spot liquidity is what is price saying at that point? Is price giving a formation that wants to move to that direction of the liquidity or not? Sometimes some of us want to hold trades for long because we are citing the liquidity far away, and price will not reach that place at that time. It will first parabolate, go back to your entry, even with your stop loss, because price is not ready to get there yet. I am not a market maker, right? And the market is not my father's property. So I don't know the liquidity that price wants to go and sweep. But one thing I know is I can study the character of price when there is liquidity and know whether it wants to go and clear liquidity close by or far away, or whether it wants to do something else. So if you watch the character of price here, you are probably likely to see that price was going to sell liquidity, and your targets would have just been easy. This line here, you are just targeted as like the support zone area there. That's this OPOI here, point of interest. Price just swept this whole liquidity into that area, right? And watching the character of price here, this was the fuck up actually. Watching the character of price here, right? It was easy to detect that price was going to buy, sweep that liquidity, or at least try to clean up all these highs here. Where are you? At least to sweep these highs. One would have easily bought to these highs because this is liquidity here. Price I really bought to sweep the high. I look at how it swept the high, came back down, swept again. Because a lot of people want to try to sell off from this area. Say, it has swept the high and she wants to sell. They will sweep them again. Behave like wanted to sell, enter this other block, and then moved up and went to sweep that liquidity. Liquidity is actually your friend. It's not something that you are trying to fight against. It is something that will guide you to know what the market is likely going to do next. Liquidity is a topic that almost never has an ending because every time you will definitely see some new level of liquidity form in the market and be like, wow, this is liquidity too. Interesting. So yeah, that's it. I believe I answered that question. I would like to start taking questions now, actually. I would like to take questions. Now we are looking for more liquidity in the something. Look at this here, guys. Look at this ranging area. Look at that ranging area there. Look at this 3 touches there. Look at this area here. Look at that. Beautiful stuff, right? When you put it at the bottom here. Beautiful stuff. Touched it, cleared it. Look at liquidity at the top here. Clear this one. Now, the regular swing that I talked about, there is no credible time frame. I've explained how to use time frame already. That question is like a lazy question. So I don't know how to answer. As I'm talking, you hear that I'm explaining how to use time frame. Sorry guys, I'm talking like this, right? I'm explaining how to use time frames. There's no time frame that's reliable for liquidity. Liquidity is on every time frame. So when you are doing zone to zone, when you are doing zone to zone trades, you are probably on the smart time frame doing zone to zone because you have cited a liquidity that is close to price. You just want price to go and clear that liquidity. Like this one that I cited here now. I just want price to come and clear this highs for me. So I look for entry to that high. So I know once price clears it, price can start to do whatever it likes from there. And I'm out of the trade. Okay. And the best time frame to execute trades for me is 5 minutes and below. If you are a day trader. But if you want to swing 15 minutes and above, 1 hour, 4 hours, you can enter trades from there. But know that your stop loss will be very wide than what 5 minutes below will give you. All right. And if you notice, all my entries have always been on the 5 minutes, 3 minutes, or 1 minute time frame. All my entries. It's easier for me now because you will easily see those liquidity in between. And then you can to just an entry and then you make your money and then you're out of the trade. No time. All right, no time. Yesterday I was teaching you guys about yesterday morning I was teaching you guys about data swing. I said when price Asia session does a range or whatever it does during Asia session, right? Whatever Asia session does, what are you going to be looking out for? You will mark the low of the Asian session. You mark the low. You will mark the high. You mark the high of the Asian session. Then you wait for price to either clear the highs or the lows. What is that clear? Liquidity. Because there are people that Asian highs and Asian lows are areas where they want to enter new entry. So a lot of people will first sweep their money away first before they go in the direction they want to go. All right. So the swing now is the price comes first, clears these lows, does like it wants to keep on selling, sweep the liquidity here. But for those that want to buy, some people want to come and enter buy again from here. So to come and sweep the liquidity, move up again, probably sweep the liquidity for people that think that I to buy. They now create fresh structure like this, and then to now buy. Then to now buy back to the highs of the day, right? From lows to the highs of the day. That's wiped everybody out. Liquidity. That swing is liquidity. Most times this high, when it wants to come to this high, it's a little. Sometimes it might sweep that high a little. And what should they do next? Sell massively. Because price always go after liquidity. And all these highs and all these lows, highs and lows are liquidity. Okay, our liquidity. 12 a.m. to 8 a.m. Asian range. Yes. 12 a.m. to Asian to you can go and watch the videos of yesterday for our live trading session. Beautiful. Tomorrow morning we have a live trading session. Guys, please, I don't know if I seek your indulgence to end the meeting tonight. If you have questions, I would like to take your questions now. I would like to take more questions, actually, more questions. more questions, many more questions. Judas swing now is what happened here. Look at this. Look at this. Let me show you. I can't just end like that. I need to see more things. That's why I'm holding myself. Look at this. Look at this point. And look at, no, it's not a mark. I know actually who marks it. And look at these lows here. And look at those lows there. Right? Look at those lows there. This is liquidity. What did price first do? Price came, swept this liquidity, this low liquidity here. Crazy. Swept it very well. Look at what it first did. I'm explaining liquidity here. I don't want to be talking too much. I'll just show you on the chart. After I've drawn that one I drew before, the next thing to show you on that. It created a low, moved up, swept the low. So, and then what did it do? Moved up, cleared this high, and from that high, see that wick there, that wick. That is a new smooth entry, and then just did what it had to do. That's another entry in that place that if I was on my chart on that day, I would have definitely seen it. Just watch price do its thing and then just put your stop loss below that point. And you'll take profit at where? Take profit at where? This high. Because we didn't know that this high, it will create a high and drop. So your first take profit to be this high is here. That first take profit, and then you go to break even and secure some profit. Not take profit to be this high is here. And what the price do? Now you see that there's liquidity above here. Right? Those are there liquidity. Oh, I did not share it in the Discord. I'll share it in the Discord. And then I will try to give everybody access this night or first thing. Look at that high there. You see that price cleared this high and went back down. Price cleared this high and went back down. So you've already moved, as price got to that high, you've already moved to break even already. You've secured like 70% of your profit. And then it came back to your entry. You are good. So that person that says, what liquidity do we target? You can see that you just target liquidity, but always secure profit on the way. Discord is not for you, Sam Adekweju. Discord is not for you. It's for those that maintain minus NFT. So yes. So yeah, that's it. You see the Judas swing there. It first swept the lows, swept the lows very well. Then created an entry to sweep the high. Let us see what time was that. That was between 10 a.m. It started creating that zone around 10 a.m. Created it till 11:30. Swept that zone. And by New York session, this must be New York. This entry must be New York session. It's not New York session actually. It was still London. 12:40, 12 o'clock, 12:30 thereabouts. Our entry and then bought. Right? Let us see what New York session did that day. 2 o'clock. It was New York session that finally caused the buy that went to it and moved up like this. This is New York session here. This was where New York session started from. The New York session started from here. Pushed up and by 15 minutes after 15 minutes to about 2:30. 30 is New York session and not 2 o'clock, it's 2:30. Literally 30 was when the New York session really pushed price. Price just sold a bit to push price in the New York session, right? So you see, manipulation, that's a nice thing again. Manipulation, accumulation, and distribution. I will teach you guys that. Just be getting all this concept as moving, right? Just be getting it in your mind. And as when we are not doing live trading, I'll be fusing in everything together. So you start understanding, oh, this is how it works. This is how it does. AMD, okay, accumulation, manipulation, and distribution. See me, I did not know. I don't know that there is one name you should call it, right? But this is out of personal studies anyway. Look at this. Look at this. Look at what price did here. This is not what I'm saying. Look at what price did here. Look at what price did here. They call it power of three. I don't know. I've never studied power of three in my life before. In my life, I've never studied power of three before. So I don't know what it is. Look at what price it is. Accumulated right here. moved up and swept these lows, push back up again. Is price trying to buy? Is this nonsense? It's your animal really. What's this rubbish? Expect price to sell at least area. Anyways, this whole area of relation created liquidity that was straight to the top side and straight to the low side, but because it is night, there's low volatility in the market, so we don't know what the market is actually. Okay, so yeah, I believe I've explained liquidity. I believe a lot of people understood already, and we'll keep talking about it. Even in the next meeting that we have, we'll be talking about something else entirely. There's no way we'll not talk about liquidity. And liquidity happens on every pair and every time frame. There is always liquidity. And when I started, I remember drawing all of these diagrams at the bottom side of my screen. At the bottom side of my screen right here. And I told you, this is a recap. We'll be ending now. Double top, there's liquidity lying above there. People stop loss. Double top, there's liquidity there. On any time frame you see all these things, be weary. Except price gives you very good shock. This pen line liquidity, there is stop losses below it. Likewise, all of this is up and down. And even this type of ranging market, price will still try to manipulate you, try to sweep liquidity before it gives you entry. But always, no matter how little, wait for sweep of liquidity before you dump a trade. I don't know if there are more questions. If there are questions, you can just ask now. Only about 1 minute to go, and then we move on to wait for tomorrow morning for the live session, for the live session where we'll be trading. I don't know whether we'll trade GPUs or USD, or maybe we'll trade both. But tomorrow we determine what we are doing. Tomorrow we'll actually down. So in the fact that there are no questions, this recording will be done and forwarded to everybody. Thank you very much for M Square. This recording will be added up and sent to everybody. We can go back and rewatch it. And subsequently, like I said, we are still going to talk about many of these concepts infused together. So by the time I now start telling that, oh, you can see this is the liquidity that was swept here. Sometimes I'll tell you guys, maybe during our live session, I can say, guys, we are waiting for something. I want price to clear this high. It's because I know that there's liquidity there. That price must clear before it moves. Inefficiency and liquidity, not just they call these things names. They're just names. Price creates gaps. I remember before I knew what imbalance was in 2020, then I found out that price would create gaps. And as soon as, usually on Fridays when markets close, and as soon as price open on Monday, it will run and go and fill that gap. So what do I have to do? 11 p.m. on Sunday, I will go and wait for market to just open and enter the market to go and fill up that gap before it moves. These are all what we call inefficiencies, but I will explain that in more details some other time. But if FEG, no, I will explain FEG. Let me go and write it down. I was doing all this once in our other class. We have 1 month, so chill out. We have meeting tomorrow morning, tomorrow night. We have meeting tomorrow morning and tomorrow night. So we have meeting, live trading session. The FEG is in balance. Fair value gap, no, it's fair. FAIR. I beg you. FAIR. Fair. Like I said, all these things are all the same thing. They are all the same thing. Okay, that's not just complicated with anything. I will share with you guys. Tomorrow we have live trading during London. We have live trading during New York, but the New York live trading tomorrow is cancelled actually, because I have a very important meeting to be in tomorrow. Very important. Very important. I can't even skip it. So we trade only New London tomorrow. And then by tomorrow night, we have a 1 hour meeting just like this. A 1 hour meeting just like this one. Then we'll talk about another entirely. Okay. So if you want SWI, please come and give me money. Those of you that use $45 to collect $2,000 on SWI today, come and give me money. Come and give me money, or else come and give me money. That's one. That's one. I need money. All right, guys. Have a good night's rest. We'll see you in tomorrow's live trading session. Good night.